Hey guys, welcome back to another video, and today I'm here to talk about the AI bubble and why I think it might pop soon. So if you guys do enjoy this video, be sure to smash that like button, also subscribe to the channel. I really appreciate your guys' support, and without further ado, let's get right into it. So stock market's up today, it's a good day. Do I think this is going to hold? No, I don't think so at all. I think the stock market dropped so much on Friday that it's recovering a little bit. The S&P literally dropped almost, pretty much 3%. If we look at, SPY today, let's see how much it's up. It's up around almost 2%, so it's still lost a percent overall. Even more, 1.5%. I don't think this is going to hold. We'll see. Time will tell. But with the AI bubble, guys, AMD, one of my major holdings, you see right here, my biggest holding, up 100% on this one. This one's popped recently because of AI. But there's a thing going on where OpenAI is investing into AMD. And then, there's just a big circle of, NVIDIA investing into OpenAI, and then Microsoft investing into NVIDIA. And a lot of these companies are just exchanging money, and it's not really making sense at this point. So I wanted to get into a few articles today. This one is about, the OpenAI CEO, Sam Altman, and then also Mark Zuckerberg, CEO of Meta, Facebook, if you guys know. This is a chart right here. I wanted to go over capital expenditure, how much companies are really getting back from AI. They think that AI is going to make companies go up more this earnings season. Wall Street says that. Yeah. And then what made the dot-com bubble pop? Because that's the last, tech-related, market we've seen just. So let's get into the video now. This is the first article, so it's not just Sam Altman warning about AI bubble. It's now Mark Zuckerberg that says a collapse is definitely a possibility. So a lot of the times these CEOs are just talking, you know what I mean? But usually they're talking their companies up. So for the CEO of OpenAI, his whole life, his whole income is based around AI, and he's doing all right for himself. He's doing all right. He has a very successful company, and same thing with Mark Zuckerberg. But both of their companies are all AI. That's just what their companies are at this point in time because that's how powerful it is. And both of them are saying that a collapse may be imminent and it may be happening soon. So for them to be saying that about their own company means that there's probably something going on. So you see. Deutsche Bank called it the summer AI turned ugly for weeks with every new bit of evidence that corporations were failing at AI adoption. Fears of an AI bubble have intensified, fueled by the realization of how top-heavy the S&P 500 has grown. So the S&P 500 is insanely top-heavy with tech right now. It makes sense. It makes sense because tech has been so successful over the past, 10, 20, almost 30 years. Tech has just been dominating the market. So it makes a lot of sense, but at the same time, they need to rebalance soon or, when this tech drops, we're going to see a scary drop in a lot of the S&P 500. So this is an August study from MIT. It found that 95%, yes, 95%, so every percent of companies besides five were failing to deliver a return on investment when they integrated AI pilot programs, despite over $40 billion being poured into the space. So over $40 billion was poured into that space, and 95% of them didn't make a dime off it. They probably lost money. And then, well, they did. They lost their initial investment. They probably lost some more, And then there's a lot of concerns with AI bubbles, Sam Altman says, which is, excuse me, that's pretty interesting for the CEO of an AI company to say that. If we keep reading here, we also see that Meta CEO acknowledged the rapid development of and surging investments in AI. It's starting to form a bubble. This is very, very, very interesting that Mark Zuckerberg would say this because he wants people to buy his stock. Why would he not? Why would he not want people to go buy Facebook? It makes a lot of sense. So I wanted to get into this graphic right here. You guys can see my face is probably in the bottom right. But if you look to the left, we see the capital expenditures over the years. This is just CapEx in general. This isn't AI only AI. This is just CapEx as a total. We see that usually it's rising, 29%, 70% one year, but they chilled out next year. Okay, we're only going to go up 3% next year because we went up 70 last year. So pretty much staying around that 30% range. Then we see 38, 34, pretty much that 30% range, a little bit higher, but then they chilled out next year. Let's only go up 19%. The next year, they went down 3%. Companies said, all right, we're doing great. We can chill out a little bit on the expenditures. We can chill out a little bit on the spending. And they went down 3%. And then the next year, they went up 55. That was a big jump. 55% is something that we've only seen once, and near that range. And that was followed by only 3% jump the next year. So we had this 55% jump, and then we have a 42% jump. So that's back to back. That's almost 100% in 2 years, which hasn't been a thing, unless we're down here where they only went up 3%. And this was a rough time in the market. They only went up 3% because that's all they could afford to do. We're seeing a very similar pattern. It's looking like that's probably going to be the same thing. So that's all they could afford to do. So they lost 3% because it was a rough time in the economy. They couldn't even do it. Usually when this capex is increased by this inflated amount, very soon after that the stock market, these stocks in particular, Microsoft, Google, Meta, Amazon, every stock in the Mag 7 has a very hard time making money. A very hard time making money to the point where they need to decrease their capital expenditure. They can't even invest as much as they want to because they don't have any money. They don't have any money to invest. And I think that we're nearing one of those points. I'm very confident that we're probably nearing one of those times where the capital expenditures have been rising very rapidly and then they're going to drop. They're going to drop. The capital expenditures are going to drop because companies can't afford to keep doing what they're doing. And that's when the bubble is popped, basically. So this is what they were talking about earlier. So a recent study from MIT released after the June CEO Summit backed Siegel's claims. Their research revealed that 95% of 52 organizations considered had achieved zero return on investment. Zero return on investment, despite spending $30 billion to $40 billion on Gen AI across more than 300 initiatives. So these are smaller companies. You see... excuse me. No, these are actually bigger companies, smaller on the scale of these companies, but you see, I mean, this is how much Amazon is spending on capital expenditure in 2024, probably, about 60, 70, 80 billion. So pretty big deal for these companies to, all in all lose 40 billion combined. That's a lot of money. Okay. And then if we take a look at this article right here, we see companies keep crushing their earnings. Why Wall Street expects AI to power stocks higher. I wanted to talk about this because Wall Street. Everyone's talking about Wall Street. Wall Street wants you to invest money with them. Wall Street wants you to invest into the stock market. That's just what they want. So if Wall Street is telling you to put money into the stock market, who's making money? Wall Street is. You might make money, but if you do make money, it's off of stocks going up, and Wall Street makes money off of the commission of you investing into stocks. So the fact that Wall Street is telling you to buy stocks and that it's going to go higher makes a lot of sense because that's what they want. Okay, they don't care if you make money, they care if they get their commission on their trade, or if their stocks go up, which they're probably investing in something that's going to underperform the S&P 500 anyways. But yeah, they literally do not care about your money. They just want the commission. They want to take a percent of your portfolio a year. They're going to say whatever. Wall Street's always been like that. And then we see, so they're just talking this whole article about a lot of things that honestly aren't really that true. So tech companies are guiding earnings higher this season more than any other sector. Yes, they are. They are guiding earnings higher because, AI is making it so that they're that advanced. Our latest blockbuster tie-up between ChatGPT and OpenAI and AMD has revived questions about whether the market is in an outright bubble. It has. We haven't seen companies rise this much and go down this fast, in a long time. There's a lot of really volatile companies out there. Valuations are high, so it's more to take a little closer look into that. Guys, when stocks are, market crashes happen when people are like, oh, buy NVIDIA, like it's just going up. It's just going up. All you can do is make money. That's when market crashes happen because then people that don't even invest in the stock market, people that have never heard about the stock market, hear at their work that NVIDIA has gone up 100% in the last year and they should buy it. And then they go and buy it and they're up 100% and then they tell their friend. And that's like when it's just that easy to make money, it's just not, that's just when the market is definitely going to pop very soon. And we see NVIDIA is just going up. This is a live graph of NVIDIA today. They're up 85% year to date. 85. Or no, Oracle is up 85. NVIDIA is up around 40, but still. Oracle is, again, NVIDIA, Oracle is buying all of NVIDIA's chips. So they're big, NVIDIA makes money from all of these big companies. So once these big companies have to slow down on their CapEx, then what's going to happen to NVIDIA? It's just all a domino effect in this space. NVIDIA, AMD, both of them. I'm holding a lot of AMD because I think the company was undervalued by a large amount when I was holding it. But at the same time, I think that, it is scary with this AI bubble. I think that it is going to happen very soon. I don't know when it's going to happen, but once we realize that it happened, it's too late. Because NVIDIA and AMD are all powered by chip sales, which have just exploded in the past couple of years, the past 5 years, because of AI. It takes so much power. There's so many chips that are involved with it. It's just, just a whole different ballpark than what these companies have ever experienced in their running life. It's just a complete, variable thrown into the mix. And Nvidia's, they're both dealing with it amazingly well. They're making tons of money. But these companies that are funding them, when they aren't able to fund them anymore, then what's going to happen? And then Nvidia is not going to be able to make chips because they're not making as much money, and it's just all a domino effect. All these companies are so connected within one each other. That's why you need to, diversify your portfolio out of that space. So I also wanted to talk about this Google Gemini AI overview. AI overview. I mean, why not, right? But Google, a stock that I very much like, might make a video on that one tomorrow. There's a lot of money to make there, not in an AI sense, but we see the dot-com bubble bursted due to a combination of rising interest rates, which made speculative investments less attractive, the unsustainable overvalued stock prices of companies with no profits or viable business models, and this led to loss of investor confidence. Basically, the market crashed, okay? If we take a look at this image right here, we can see this is when the dot-com bubble happened. So we see that, I mean, look at this. This market was literally, it rose in 2000 to all the way, the Dow 5x in 5 years. It was at 1,000, it went all the way to 5,000, and then it dropped back to 1,000. I mean, it's just a lot of money was lost during that, because when it gets to that 5,000 mark, everyone's saying, oh, throw your money in the stock market. You're going to make money. It's just going up. You're going to make money in the short term. That's not what happens. You're not going to make money in the short term. Analyst says Amazon stock, then below 250, will hit 400 within a year, and it does within weeks. I mean, those are the kind of gains that we're seeing right now. These are exactly the same. I mean, it's just the same space, too. It's still the internet. It's still tech. That's what tech does. It has cycles of growth because there's new innovations. Like .com was a new innovation, and there was a new cycle of growth. And then the stock market rose tremendously because this is a new invention no one's ever seen before. I'd flock to invest in it as well. But you got to stay true to your fundamentals and see when companies are overvalued and you shouldn't buy them. And then even in an overvalued market, there's companies with a lot of opportunity. So rising interest rates is what led this. Interest rates are dropping right now, but they've been rising for a while. Interest rates are still high right now. So there's no reason that, borrowing money is expensive right now. So there's no reason that this should play a factor in it. Unprofitable companies. We just saw a metric that 95% of organizations, 95%, almost 100, almost every single one. And when you take 52 organizations, this means two of them this means two of them made money out of 52, and they had zero return on investment despite spending $30 billion to $40 billion. And I'm sure a lot of people invested in these startups. They invested in these companies. They heard AI, and they invested. How'd that work out for them? You know what I mean? I mean, it's rough, but this burned through their initial funding and quickly became worthless. So we have unprofitable companies. These are a lot of nails that we're going to hit on the head right here. We have market panic and confident loss, a cascade of events starting with the NASDAQ peaking in March 2000, triggered a cycle of fear and selling. We're very close to that point. I mean, if we take a look at the S&P right now, let's just take a look at SPY. Let's see how inflated it really is, because it's expensive all the time. I mean, it always is at an all-time high, but look at how fast it's risen, because there was a drop you see right here all the way in April. So this, makes me think maybe the AI bubble will happen for a little bit longer, but at the same time, you can't base history isn't going to be exactly what happens. But I mean, you see how fast this rose. It was in April, it was $500, and now it's already $662. So if you invested in April, you would have made around 30%, over 30%, almost 40% in the S&P in, I don't even know how long. How long is that? April just to October? That's scary. Okay, that's not even, that's pretty much half a year. And that's, if you're making 40% on the S&P 500 in half a year, and it's up 89% in the past 5 years, and then you look at, all time, it's not really going up 40% that often. And when it is, it drops like hell. It drops very fast, okay? So when the stock market does go up that fast, it tends to drop at the same speed, because look at this, increase right here. This is just uncharacteristic. It's unproportional to all the other points in the graph. Yes, it is a higher dollar value, so it will look a little unproportional, but you've just never seen a straight up SPY candle like this before, unless it's followed by a pretty massive drop. And these drops aren't even, as big as they actually look to be. But I mean, look at right here, you see, if you look at the prices, it was 152, dropped all the way down to 84, which, it pretty much got cut in half in value. I can see that happening right now in the S&P. Where it's 662, I see a world where maybe it drops down to 326, the lows of October 2020. That's very possible, just because a lot of these companies are not making as much money as they, say they are, think they're going to make. And then at the same time, a lot of them are funded by their peers. So AMD, without Microsoft making money, without Amazon making money, if one bad thing happens in the economy, it's over for all of them. Because all it takes is for one of these companies to take initiative and say, okay, NVIDIA, we need to cut back spending on your chips. And then Google's, I mean, let's say Amazon says that. And then Google's going to be like, oh, okay, like finally someone said that. Like Amazon said we can cut back on spending. We're probably going to cut back on spending as well because we don't have to match their AI capabilities anymore. We can just, kind of invest in our own thing and we don't have to buy all those chips. And we can, kind of be okay with not the same growth we were getting. And then once two of the big companies do that, you start to think, okay, maybe all of these companies are going to do that. Maybe all of these companies are going to stop investing in AI. This AI bubble could possibly pop. So, I mean, there's a lot of nails, like I said, on the head. There's global economic uncertainty, which it feels like is happening all the time. Overvalued stocks. Every stock is overvalued right now in the market. Venture capital and investment bank practices. There's a lot of stocks that aren't overvalued just because they're long-term holds. Like SoFi, for example, I don't think is overvalued. Cake, Google, Amazon, just because I'm going to hold them for the long term. So I think, in, say 3-7 years, these companies are going to be worth more no matter if there's an AI bubble or not. But you got to catch the AI bubble right now. I think that's going to happen very soon. And there's no way to tell exactly when it's going to happen. But there will be signs. There will be signs, and these are the signs very early. So you can take the risk. I wouldn't, I'm not telling you guys to go sell all your stocks. I'm just saying be aware. Be aware that this is a very possible outcome. There's definitely a lot of things that could occur from this AI bubble, and there's a lot of money that could be lost. There's also a lot of money that could be made. If you pull out of some of your big AI holdings right now, maybe you miss the bubble, but maybe you miss a 10% gain as well. So it's really up to you guys. I'm not going to tell you what to do with your money, but I mean, I'll show you what I do with mine. I'm very transparent with my portfolio. And yeah, so if you did enjoy this video, be sure to smash that like button. Also be sure to subscribe to the channel. That's free. You could, lose a bunch of money in the stock market. You can't lose money subscribing to my channel. You're only going to make money from my picks. So if you do enjoy the video, be sure to do that. I'm going to come at you guys with another video tomorrow like I always do. Comment down below how you feel about these videos, what kind of content you guys want to see. Appreciate the support again. It's been very amazing. Almost at 900 subscribers now. Went up very fast. Thank you guys for watching. Catch you in the next one. Peace.